Today is Wednesday, December 9th, and this is a post-market review for the stock market activities today. Right off the bat, let's talk about what happened today. Obviously, a big sell-off in the indices that came hand in hand with the DoorDash IPO, which was an absolute mania. The trading price was pretty much double what the IPO price initially was, meaning that the demand was huge. And this is insanity. This is the new retail investors, what I call the Robin Hoodiots, who are stampeding to buy this company regardless of valuation, regardless of anything. It's a sexy name that they're familiar with, and they stampeded to buy it. And that took a toll on the entire market. Let me explain. A couple of days ago, I issued a tweet saying that certain stocks are going to be sold to raise the cash for the new IPOs, the DoorDash and Airbnb. And look for the high momentum names, the hot names, the retail crowd's favorite names to be sold to raise the cash for the DoorDash IPO. I gave you an example as Tesla. This is exactly what you saw today. And this is the reason for the sell-off today. It was due to the IPO. Can it morph into something else, a bigger correction? Yes, it could. From a psychological perspective, everybody was complacent, thinking that we're going to have a Santa rally. Stocks are not going to go down. We were trading in very low volume. Everybody was comfortable. Today was a punch in the gut and a wake-up call that maybe it is a good idea to take your profits. What we have been preaching in this channel since the beginning of the week. Take your profits, buy protection, etc., etc. But let's take it one step at a time. Here is another tweet that I released yesterday saying that they're doing a last-minute squeeze for Snowflake. This is the old IPO, to squeeze whatever cash they can get from Snowflake so they can use that cash for the Airbnb and DoorDash IPO. Meaning that Snowflake is going to decline significantly from that point on. What do you know? Some of you already followed what I was hinting right here, bought put options of Snowflake, and now these traders are rolling in cash. They're doing good profits. So good for you. Now, the media is all over the place trying to pin a reason for the mini sell-off we saw today. And here is a bad example, a misleading example from the media. They're saying that the stocks, the Nasdaq in this specific case, went down because traders and investors were rotating from the hot names in the Nasdaq, the tech names, the momentum names, into the reopening names. That is not true. What happened is retail traders placed market orders for DoorDash to buy the IPO. They had the FOMO, they were stampeding right away from the morning. When the IPO price opened way higher than anybody expected, now to fulfill the orders to buy the IPO, your broker has to sell something. What are the most held names by retail traders right now? Right away, you saw Snowflake down, Moderna down big, Tesla down big, and here it is. Norwegian Cruises down big, American Airlines down big. Retail traders, investors, names favorites. It is not a rotation from tech momentum to the reopening trade or the travel names. That is not true. Very misleading headline here from Market Watch. It is all about the IPO, and tomorrow could be worse. If we see the same stampede with Airbnb, we could see another massive sell-off for all of these retail investors' favorite names. So I hope this is clear that the reason for the correction today, the sell-off, whatever you want to call it, is the DoorDash IPO. And I believe that it could morph into something bigger. But for now, we're taking it one day at a time. With that being said, let's cover the market. And here we go. The Dow Industrial Average closing in the red, down 105.07 points, or a decline of 0.35%. The Nasdaq, the loser of the day, down 243.82 points, or 1.94%. The S&P 500 also in the red, down 29.43 points, or a decline of 0.79%. And here is the sector's performance for the day. Every sector managed to close in the red, with exception of industrials barely in the green. So we're not going to give any medals today. Pathetic performance across the board. Leading the decliners of the day: technology, consumer cyclicals, and communication services. Moving on to cover the futures market action today. Crude oil muted, slightly in the green, and we move down to softs. Coca down. But the coca war's about to heat up once again. We have news from Ghana, one of the top coca producers in the world. The President Nana Akufo-Addo won the re-elections. I'd vote for this guy just for his name. But remember, from my understanding, the farmers are supporting this guy because he is demanding more taxes from coca importers. And this is the reason behind the coca war that started to heat up in November. So perhaps we will see coca prices climbing once again. So if you like chocolate, you better buy it now. Chocolate is the new gold. We did see massive gains for cotton, lumber, and sugar. Sugar up almost 4% for the day. Lumber, it was trading at around $4.50 in November. Since the rally, look at where it is right now, $7.50. Unbelievable rally once again for lumber. Lagging the day, along with coca, we see OJ muted and coffee down over 2% or so. What's going on in metals? Remember, very important thing to remember here. Yesterday, we saw gold trading in the green, but silver in the red. And I told you that silver is predicting the decline of gold, the upcoming decline of gold. Therefore, I'm taking some of my profits in gold. And right away, we see gold declining about 2% or so today. Silver down, platinum down, palladium down. However, copper muted for the day. What about meats? Live cattle in the green slightly, feeder cattle in the red just slightly. And the winner of the day, lean hogs closing in the green 1% or so. What's going on with grains? It is rebound day for grains. Soy products closing in the green, corn, wheat, rough rice, canola. And my favorite, the rally continues in oats, closing about 1.5% for the day. Moving on to the big casino, the options market. Let's see how the tables did today. And right away, we see the action at the Apple table heating up once again. Coming up at number 1 with 2 million contracts traded today. About 72% of those were calls. Tesla at number 2 with over 1.1 million contracts of the day. About 62% of those were calls. You're seeing that the bets are starting to shift from calls to puts in Tesla, the shift in momentum. This is your indicator that perhaps the gamma squeeze in Tesla is pretty much over. Pfizer at number 3 remains a gambling crowd's favorite right now, with over 700,000 contracts exchanging hands today. Over 88% of those were calls. Take a look at the NEO table and the Palantir table, not so hot so today, and you see these two names declining. When we don't see action in Palantir, you see the name declining right away. And take a look at the name at the bottom of the table, AT&T. Remember, yesterday I issued a tweet saying that I'm seeing unusual activities heating up in the options market for AT&T, suggesting a squeeze to the upside. And right away, some of you followed that call, bought call options in AT&T, and they made quick profits today. In, out, hello, goodbye, easy peasy profit. Moving on to the interesting trades for the day, the unusual activity. Right away, we see a big bet for Farfetch, the ticker FTSH. They're buying the 65 calls, expiration date December 18th, next week, with expectation that the name will climb over 10% by then. And this is an expensive trade costing over $500,000 or so. Here's another one for Chewy, the ticker CHWY. They're buying the 80 calls. Chewy reported earnings yesterday, climbing higher today, and they're betting that the squeeze and the momentum will continue in the name. They're buying the 80 calls, expiration date Christmas Eve, with expectation that the name will climb over 6% by then. Again, an expensive trade costing over $1.5 million. Here is another one for Rite Aid's Pharmacy, RAD, the ticker RAD, and they're buying the 23 calls, expiration date January 15th, with expectation that the name will climb over 18% by then. And this is a massive one, costing over $700,000. Very speculative, very notable, unusual activities here for Rite Aid. What about Apple? Here is a very bullish one. They're buying the 135 calls, expiration date January 22nd, with expectation that Apple will climb over 11% by then. And this is a very expensive one, costing the trader over $1.5 million. More unusual activities for Xpeng, the ticker XPEV. They're buying the 47 calls, expiration date December 18th, with expectation that the name will climb over 5% or so. Again, very expensive trade, costing about $1 million or so. Xpeng been muted, trading in the red for a while. This trader is betting that the activities in Xpeng will heat up once again. We see more bets here for Virgin Galactic. Space, betting that the gamma squeeze will resume and continue the upside. And in this case, they're buying the 38 calls, expiration date next week, with expectation of over 18% gains by then for Virgin Galactic. And they're paying about $500,000 for this one alone. This is the insanity in the casino. They're betting that names will climb double digits. It's absolutely insane, the activities that we're seeing right now. Similar story with AMD. They're buying the 103 calls. Expiration date New Year's Eve. What are they expecting? They're expecting the name to climb over 15% by then. And they're paying close to $500,000 for this one alone. Here's another one, Carnival Cruises. They're buying the 25 bucks calls. Expiration date January 22nd, with expectation that the name will climb over 10% by then. This is the expensive trade, costing about $500,000. You're seeing the theme here of the mania. The gambling. Another one for Freeport-McMoRan. Remember, I started buying puts at the beginning of the week for my Freeport-McMoRan stock investment. To protect my investment, I'm buying insurance. Freeport-McMoRan FCX puts. And now we're seeing the activities, the bearish activities against Freeport-McMoRan heating up because the dollar is showing signs of waking up from the dead. In this case, they're buying the 21.5 puts, expiration date January 8th, with expectation that the name will decline over 12% by then. And here is a very interesting one for the Qs. And this is a spread, so pay attention here. Number one, they're buying the 265 puts, expiration date January 22nd. And they're paying about $270 per contract, or $2.70 per option. And then they're selling the 245 puts, expiration date also January 22nd, and they're receiving credit of about $1.20 per option, meaning that they are reducing their entry cost to about $1.50 per option, and they're expecting that the Qs will decline from this point on about 15% or so, at least over 12% or so, for the trade to become profitable. We saw bearish activities for the SPY earlier in the week, buying over $15 million worth of protection for the SPY. Yesterday, we saw a trader buying millions of dollars in puts for the IWM. Now they're buying puts for the Qs. Massive amounts here. So when you put the pieces of the puzzle together, you see that the sentiment is shifting, that we are heading for a correction. Moving on to the headlines that shaped the day. And right away, we heard some economic news here that the US jobs openings rose in October. However, layoffs rose faster. The picture in the economy is starting to look worse and worse every time we progress through this quote-unquote recovery. Without stimulus, without another round of PPP loans, this economy will flatter and perhaps head down to contraction once again. We also heard some vaccine news that UK regulators warned people with history of significant allergic reactions not to have the Pfizer vaccine after 2 adverse reactions. Who doesn't have allergies these days? We all have allergies. And now you're going to start seeing some bad data coming out regarding the vaccines. So the market might be celebrating a little too early here about the vaccine optimism. Oh, and by the way, did you guys catch this? President Trump tweeted in the morning, "Stock markets at new all-time highs." Now we know that every time he brags about the stock market, that is a solid signal to short, because it is a market top. Every single time, literally every single time he brags about the stock market, it is a sell signal. Very reliable indicator right there. Moving on to the stimulus fiasco. And right away, yesterday we heard a proposal from the Treasury Secretary Slimy Mnuchin. And in the new proposal, it is a $916 billion stimulus package. It includes the liability protection, which is the sticky issue for Republicans, and the state and local funding, which is the sticky issue for the Democrats. However, here's the catch. The stimulus checks are being reduced from $1,200 to $600 instead. They're bargaining on your end. The people who are suffering right now in the economic conditions. Shouldn't you have a seat at the table here and demand nothing less than $1,200 stimulus checks? But these bastards are not there to represent the people. They are there to represent corporate interest, and that is it. But here we go. Things are not going as expected regarding the stimulus fiasco. We do have the circus about Brexit over there in Europe. Here we have the stimulus circus, and we have news that the talks hit another wall today. And remember, they got 1 week to finish this deal. Time is running out. Here is more detail of what McConnell said. Mitch is describing the Democratic statement regarding the fallout of the stimulus talks today as schizophrenic. It sounds that they're very close to signing a deal from these statements. My stimulus optimism is going higher and higher by the day. And here is more. We have the Bernie side of the fight, and they're saying we are not going to accept anything less than $1,200 stimulus checks and $500 additional per child. Anything less, we're not signing on the bill. So now you have this big fight. Understand that the Democrats and the Republican Party, at the end of the day, they work for corporate interest, the donor class. They have no problem passing a bill if it doesn't include stimulus checks at all. Nancy Pelosi herself said that yesterday, that it doesn't matter if we have stimulus checks on this one, we're gonna have another one that includes stimulus checks. People have been waiting and waiting since August. They're behind on their mortgage and rent payments, waiting for the talks about stimulus to finish up already, so they can catch up with the payments that they're behind on. Mortgage, rent, bills. They're about to get evicted if they don't pay their bills. But Nancy says, we can delay it another 2 months or so. Give me a break. Pass the damn thing already. And here it is, the biggest news of the day, the DoorDash IPO. Now we have the founders and corporate executives in DoorDash becoming filthy rich, billions and billions of dollars. They're going to start dumping stock very, very soon to cash in their profits. Unfortunately, the story of 2020 from the maniac retail traders, the morons, the Robin Hoodiots, is that they're only making the rich richer. They stampede in buying these lottery tickets with no regard to the valuation, no bargaining whatsoever about getting a good price, because they have no clue how to invest. They press a couple of buttons in the Robin Hood app, they get some cash here and there, and they're pretty much gambling on horses. Stocks are horses for them. And now they're gonna gamble on the DoorDash horse with no regard to the valuation whatsoever. What is that gonna make? Corporate insiders, DoorDash executives are gonna get filthy rich. And you already heard the story about Snowflake CEO cashing $120 million per month. And the reason is the morons who bought the Snowflake IPO and continue to buy it, regardless of the valuation. The company makes $400 million a year. Meanwhile, you're paying for a valuation of $100 billion. Are you insane? Are you stupid? But stupidity is a bless for the rich, because this is how they keep getting richer. We, the dummy retail traders, continue to chase the lottery ticket. The rich keeps getting richer. At the end of the day, they're going to crash this market on top of our heads, and we're going to lose all of our money, the retail side, and they get to keep the cash. Moving on to very disturbing news that we heard yesterday regarding the cybersecurity firm FireEye. Turns out somebody hacked them, and they're speculating, or they're suspecting that it is a foreign entity, meaning that it is a foreign government that hacked FireEye. And it's a very stunning development right here, because the FBI, the CIA, everybody's getting involved here to figure out who broke and hacked FireEye. But this is a PR disaster for this company. It is like if you're hiring a bodyguard to protect you, and all of a sudden the bodyguard gets his ass kicked in the middle of the street What is the point of hiring the bodyguard if he cannot protect himself to begin with? And here it is, more corporate greed. Delta CEO asks employees to take more unpaid leave in 2021. No, you should take pay cuts to your multi-million-dollar compensation package. The whole point of the bailout money that you received is to keep your employees paid. This bastard is have the audacity to ask his employees to take more unpaid leave so he can get richer along with the board executives. And guess what? It is only a matter of time before they start using that taxpayer money for shares buybacks. Because unfortunately, your beloved politicians pass these bills without any clauses requiring any company that receives bailout money to not engage in stock buybacks, and that the money is not used for executive bonuses. Remember the story of JCPenney. They received money, they fired their employees, and they used the cash for executive bonuses. Absolutely disgusting. Moving on to the iMob, Apple, and now we're hearing more reviews about the AirPod Max, which by the way cost $550 for earphones. Are you kidding me? And now even people who can afford the price are saying, no thanks, we're not buying it. I don't want to be caught in the street wearing $550 AirPods when other people's are waiting in food lines. And Apple are starting to hear very negative reviews, very negative commentary about this particular product. Furthermore, here's the other disaster. Apple new $550 AirPods Max headphones won't arrive in time for the holiday season for most customers. What is the point then? This could be perhaps one of the biggest flops for Apple. They haven't had a flop for a long time now. This is perhaps the first one in a very long time. And here is the last piece of news and the most important one for the day. JPMorgan had enough of the sugarcoating and the bullshit, and today they issued a dire warning for the market, saying that certain stocks are in extreme bubble territory and they have to be downgraded and faded. We're talking about Zoom, Peloton, DocuSign, Okta, all the speculative names. They even had a comical, perhaps sarcastic upgrade for Tesla, hiking the price from $80 to $90 as a price target for Tesla. Remember, we heard the news a few days ago from Citibank saying that buying the market and stocks at these levels comes with 100% chance of loss. 100%, because we have reached extreme bubble territory in some of the names in the market, matching and perhaps surpassing the Mania levels that we have not seen since the 1999 dot-com boom. I do recommend that you read the entire note from JPMorgan because they've had enough. They know that buying these stocks right now will come with 100% chance of a loss, and they had to issue the warning and the downgrades today. And you saw a lot of these stocks trading in the red severely during the trading session. Moving on to the heat map analysis, and let's see what happened today. Right away, the picture is mixed. You see winners and losers, but you can't help but to see that the majority of the losses came from the momentum names and the high-tech names. And this is further supporting my take of the day that this was pretty much retail traders stampeding to buy the DoorDash IPO, and they had to sell the hot names that they own. What happens when they start selling Apple, Microsoft, Nvidia, Zoom, Snapchat, etc.? What happens is the ETF effect. When certain names, specifically bigger names, start to be sold off, they take down the entire index with them. This is pretty much the story of the day. And here we go. Let's start with the technology sector. It is a sea of red right away. The majority of the pain is in the semiconductor sector, one of the hottest sectors for the year. They're taking profits and shifting the money to the new IPOs. Nvidia down, Intel down, Taiwan down, AMD down big, over 3%. But you see the big boxes of Apple and Microsoft down about 2% apiece. Adobe down, Square down, SPLK down. Remember, the name rebounded yesterday about 3% or so. Today, it is giving up all of the gains back. It shows you another bad understanding from the new amateur traders who invaded the market this year. They believe that anything that drops really big will rebound in a V-shaped recovery really big. You cannot blame them. They're accustomed to this kind of thinking. This is what they saw right away when they started their investing and trading journey. So right away they went on buying call options on SPLK right after the big drop, and they're losing a lot of money. When certain things drop big, they drop for a reason. It doesn't mean that you're gonna see a V-shaped recovery right away. But we see names in the software sector down big today. Salesforce, ServiceNow, Team, Workday, Shopify down big, almost 6% for the day. What is working here in the tech sector? Number one, you got Cisco, Oracle, IBM, the old school names that are not loved by retail traders. One name that managed to close in the green, Uber. Perhaps this goes hand in hand with DoorDash. And Lyft, similar story, closing in the green, 2% or so. What about the communication services sector? The big boxes of Google and Facebook closing in the red, big time, 2% apiece. Netflix down big, almost 4%. Snapchat, almost 2%. Zoom down big for the day, over 6%. What is closing in the green today? The boring names. AT&T starting to heat up. We have Baidu. These are not names held by retail traders in general. Moving on to consumer cyclicals. What's going on? Amazon down, Tesla down big, and that further solidify my take. They're selling retail investors' names. Why is Tesla being sold by General Motors, Ford, Toyota, Honda closing in the green? Oh, and by the way, NIO, another retail trader's favorite, closing more than 5% in the red. The picture could not be any clearer here. Big day for Lowe's, closing over 5%, almost 6%, because you guessed it, they are reinitiating the buyback program, the shares buyback program. And now we're going to have a new source of optimism, buybacks optimism, coming up soon. Let's take a look at apparel. Why is TJ Maxx up and Lulu down? Lulu, a retail crowd favorite. TJ Maxx, not so hot so. And this is why it is closing in the green, while Lulu closing in the red. And you see the reopening names not doing so good today. Marriott down, Hilton down, cruises down, casinos down. And when we shift to the consumer defensives, we see a muted picture across the board here. Walmart down, Costco down, Procter & Gamble down. Not by much, 1% or so. Here is what's working in consumer defensives. Tobacco, once again, on a tear. Philip Morris, massive gains week after week. And you see gains of about 2% or so for the day. What about REITs? The pain in REITs continues. American Tower down, Crown Castle down about 2%, Public Storage down about 1%. And what's working in REITs today? Retail REITs, Simon Property up about 1% or so. What about utilities? The weakness continue. Muted day here for utilities, slightly in the red. The only name that is working today is National Grid, the ticker NGG, up about 3.5% or so. What's going on here with basic materials? The pain resumes for gold miners. We see Newmont down about 2.5%. Barrick Gold's over 2% to the downside. But this time around, copper is joining the pain. You see names like Southern Copper down about 1% or so. Freeport-McMoRan closing just slightly in the red. But I predict that the name will experience more pain in the days to come. Moving on to energy. What's working? ExxonMobil in the green, Chevron in the red. Very interesting move from the market today. Industrials, the winner of the day, and the reason is General Electric up about 4% or so. This is a gambling name via options. It is cheap. The options are very cheap, and they're stampeding to buy these call options, creating gamma squeeze in General Electric, pushing the name higher almost every single day. And interestingly, we see that UPS closing in the green, however FedEx closing in the red. Very interesting action here. Chevron in the red, Exxon in the green, and here we have UPS in the green, FedEx in the red, and we also saw declines for Boeing down about 2% or so. Moving on to healthcare. What's going on? Take a look at Moderna, down about 8%. This is again the retail crowd favorite name. What's the other one? Pfizer, down over 1.5%, but we see Eli Lilly closing big in the green, almost 6% or so. Johnson & Johnson closing in the green, and you start to see the picture here. What's being sold, what's being bought, and some of the notable decliners in the healthcare sector today are in diagnostics. We see Thermo Fisher down over 2.5%, and we see Dexcom down over 4%. Teladoc, another retail crowd favorite names, down over 3% or so. Moving on to financials. What is being sold? Once again, you guessed it, the retail's crowd favorite names. In financials, we have PayPal. PayPal down almost 3%, and we do see modest declines for the rest of credit services. Banks, the weaker names, Citi, Wells Fargo closing in the green, JPMorgan, Bank of America muted, slightly in the red. Oh, and by the way, check out Goldman Sachs gaining for the day. Goldman Sachs doing all these IPOs, raising cash for Tesla, capturing all of these fees, and you see Goldman Sachs closing over 1.5% gains for the day. Moving on to the rotation trade, what do we see here? You could argue that the comeback stocks, the reopening names, did a little better, but I would not call it a rotation day today. You see pain in the momentum names, specifically the hotter names, DocuSign, Zoom, Nvidia, Peloton, Shopify, but names that are not so hot with retail traders such as Microsoft, Facebook did not suffer as much. But again, when you hit names like Apple, Tesla, Shopify, Zoom, you're going to have an impact on the Qs in the NASDAQ as a whole, and it will take down Facebook, Google, Microsoft down with it. Moving on across the aisle, what do we see here in the reopening names? Mixed picture. What is declining the most? Airlines. We know that airlines became very hot with retail, and you see Southwest declining the most in the reopening names. Meanwhile, General Motors rebounding in the green today, and the gainer of the day is Planet Fitness closing above 2% in the green. Moving on to the technical analysis or the charts analysis, whatever floats your boat. Starting with the SPY, here is a daily chart. What do we see today? It is a reversal candle, but it is not definitive. It is not strong enough to say, hey, it's the end of the rally, beginning of the crash, all that talk, too early. We still have a support level that we did not pierce below yet, the 364 support level. If we do see a confirmation tomorrow, another day of flush down, then there you go. You will see a crossing, a very definitive one in the MACD indicator and the RSI curling down. To begin with, this rally was a lot weaker than the previous rally during the summer from an RSI perspective. Right away, that should have been a warning signal to begin with. And perhaps to get a clearer picture, let's take a look at the SPY futures, the continuous contract. What do we see here? We see the SPY trading in a range. There is an upper limit of resistance in the range, and you see that every time we hit that range, the upper range, we face a rejection and we trend lower. This is the third time that we get rejected from that level. Is it a definitive rejection? Not yet. We need a confirmation tomorrow. But if I am correct here in my outlook, this will lead to a correction of about 10% or so to go all the way down to the lower limit of the range. And that would be about 10% correction from the top. This is not me calling it. You have top Wall Street analyst Mike Wilson also calling for a 10% correction. So it is not out of the norm if we see a 10% correction from this point on. But for now, it is too early to call it. Moving on to the Qs. The reversal here is more definitive. We pretty much have erased the entire gains of December. And this is why in my previous videos, I've been saying, please take your profits. Consider buying protection. Put options when they're cheap, because they're not going to come knocking at your door telling you that the reversal or the correction is going to happen tomorrow. It's going to come out of the blue, and one day will reverse days, if not weeks, worth of gains. So if you're waiting for your gains to go to the moon, this is a wake-up call, a smack right in the face that stocks are not just going to go up indefinitely. We had 10 straight days of gains, and you see right away today's action alone erasing at least 6 days worth of gains single-handed. I know the psychology. When the market keeps grinding higher and higher every day, nobody wants to sell and take profits, because they take profit and the next day the stock market keeps going higher and they feel that they left some money on the table. You gotta get rid of that mentality. It is a toxic mentality. There is nothing wrong with taking your profits and booking your gains. Nothing wrong at all. And today is a reminder that taking profits when the market becomes very hot and extended and you have a million indicators telling you that we are in euphoria bubble sentiment. It is not a bad idea to book your profits. Moving on to the IWM, what do we see here? A down day, but it is not a reversal candle yet. The IWM is very, very extended. Look at where it's trading right now at the RSI. The SPY, the Qs reversed without even being hot from an RSI perspective. This one is very, very hot, very extended, very overbought, whatever term you want to use. If you have the IWM, not a bad idea to take your profits now. And if you're looking for an entry to short the IWM, not a bad idea to start one right now. But give yourself a little bit of time, a longer time horizon. Go at least to January expiration date when you buy your puts. Moving on to the VIX, we've been saying that there is another pop for the VIX coming. The VIX continues to hold strong, refusing to close below 20. Right away, this was an indicator that we're gathering energy for another massive pop in the VIX. And earlier in the week, we talked about the MACD indicator in the VIX, that it is having a positive crossing, creating green impressions in the histogram. That is your signal that we have a rally in the VIX coming up. Even though the VIX was trading very muted, sometimes in the red, people started to give up, saying that the VIX is going to go down. I disagreed and predicted another leg of rally in the VIX. Now, all the shorting that's been going on against the VIX, you're going to see the pop in the VIX being amplified by short covering. Now, what do you know? The put to call ratio is going to start to recover. The VIX is going to start to pop higher. All of a sudden, the complacent and complacent market participants are going to rush to buy protection. Where were you when the put to call ratio was at historic lows and put options were dirt cheap? They're not going to be dirt cheap anymore if we see another few days of declines here, because market participants will rush to buy protection. Moving on to the Dixie. We've been saying that we could see a short covering rally in the Dixie, depending on the outcome of Brexit and whether we have a market correction or not. We are starting to see signs of life here for the dollar index from a technical perspective. Right away, you see the MACD, the daily MACD, making a successful positive crossing, making a green impression in the histogram. Furthermore, the RSI indicator is curling upward from the oversold conditions, meaning that the dollar index could rally in the days to come. And if we have a fallout in the stimulus stocks, that could amplify the rally in the dollar index by forcing shorts to cover, creating the short squeeze scenario. Moving on to gold, what do we see here? Remember, I bought gold at 1800. My target for an exit was 1925. However, in yesterday's video, I told you that I took profits off the table because I see the level of 1870 as resistance. You combine that with the decline of silver yesterday and the signs of life in the US dollar from a technical perspective, and I come to the conclusion that I should be taking profits in gold. Today, I feel vindicted because gold declined, and it looks like it's going to decline further from here. What about yields? What do we see here in the TNX for the 10 years Treasury yields? We've been waiting and waiting and waiting for the moment when yields will finally crack the very important psychological level of 1%. Today was a muted day. It was a green day, but it was pretty much flat. We did not reach 1% yet. We're waiting. And of course, you have to remember that the stimulus stocks will affect the outcome of yields. If we have a stimulus, we could crack above 1% easily. If we don't have a stimulus, you could see a decline in yields and gains for bonds, the TLT. But here is the point that I want you to pay attention to. The geniuses in the financial news media and the analyst community, they're saying that the rise in yields is an indication for the economic recovery and it will be good for the stock market. I disagree. Remember that we have a ton of zombie companies that are drowned in debt. The rise in yields could be what triggers the crash in the stock market because these companies will not be able to service their debts if yields continue to climb higher. I know 1% is still small, but if we have an impulsive rally in yields, that could kill the stock market. So keep that in mind. Moving on to Apple, what do we see here? Reaching the resistance level of 125 once again. The only time here, the difference is that it got rejected severely from 125. So is that it for the Apple rally that we've been talking about for a couple of weeks right now? It could be it. We're curling down from the MACD perspective, from the RSI perspective. Another red day will have a confirmation that 125 was it and Apple will decline. You have the support levels of 120. I don't think that will hold. We have 117 and then 113, which is a little stronger. If that doesn't hold, 106 is the strongest support. But remember, the chart has been making a series of higher lows. If we decline, we start to create lower lows, lower than 113. That would be an ominous signal for Apple and the Nasdaq as a whole. Moving on to Tesla. What do we see here? Remember, my RSI target is 84 to short Tesla. But I also told you that I have the feeling that Tesla will reverse before hitting the target just because they like to mess with me. So I started buying put options anyways, just a little, not too much. And we see a big reversal in Tesla today. It is not definitive yet. We still closed above the support line of 599. Now, we do see a curling in the RSI, a curling down in the MACD. Perhaps we're going to cross tomorrow, creating red impressions in the histogram. If we do, what is the target from the top? I'm calling from a 20% or so correction in Tesla, going all the way back to retouch the trend line in yellow. And that would be around the price level of 520. If we reach the target, we'll take it from there to forecast where Tesla will go next. But for now, my outlook is for a 20% correction in Tesla, taking us all the way back to the trend line. And here is the last chart of the day. We talked about this yesterday, the XRT, the retail ETF. Today, we saw a slight red day, pretty much trading in range. However, we had a successful crossing in the MACD indicator, creating a red impression in the histogram. And you see the RSI, it's already extended, but it is starting to curl down. We're starting to see weakness here for the XRT. Remember, this is way extended from the 20 days moving average, way extended from the 20 weeks moving average, my personal favorite, meaning that the correction is imminent in the XRT. And the risk versus reward is on side of the XRT shorts, meaning that I already started buying put options in the XRT expecting a decline. Yesterday, we reviewed all the components, not all, but the most important components of the XRT. We talked about Macy's, Kohl's, Magnet, Carvana, Etsy, etc. So if you want to take a look at that, if you missed it, go to yesterday's video. I talk about the XRT in details. And now, let's move on to conclude this video with viewers' questions, or in this case, viewers' complaints. Let's see what this guy's pissed off about. He says your headline about the dollar is really misleading. I don't think I'll ever watch your channel again. Okay, would you like to elaborate a little more, sir? Because the headline was not misleading. I was pretty much arguing that there is a scenario of an upcoming short squeeze in the dollar index, depending on the outcome of the Brexit talks and the stimulus talks here in the US. Furthermore, the short interest in the US dollar is at record lows. We have never seen the US dollar being shorted as it is right now. Remember, I'm a long-term bear when it comes to the dollar index, but when I see an excessive shorting activities in the US dollar, that paves the way for the short squeeze scenario. Anything that goes wrong here, whether we have a stimulus fallout or a Brexit fallout or market correction, when market participants are raising cash, you will see a trigger for a short squeeze and a massive rally in the dollar index. What's wrong with what I said and what I represented in my video a couple of days ago? I guess you can't have everybody satisfied. Now, the last thing I want to say before I log off is we have the Airbnb IPO tomorrow. You saw the mania about the DoorDash IPO today. I expect further mania for the Airbnb IPO. However, if it gets really crazy and out of hand, I will not participate in the IPO. I will just let it go. Because if they push it to extreme valuations, I know we've been anticipating, when will one of these IPOs bomb? We saw Uber a few months ago. Could it be Airbnb this time around? They push it really high to extreme ranges and we see a crash right away. that could take down the entire market with it. I'm not saying that that will happen, but if I see extreme activities right away, I will stay in the sidelines. I will not participate in the Airbnb IPO. That's all I got for you today. I'll talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.